Welcome to the REI Diamonds Show with Dan Breslin, your source for real estate investment jewels of wisdom.
Welcome to the REI Diamond Show, episode number 74, with Dan Zitofsky on passively investing in emerging markets. I'm Dan Breslin, host of the REI Diamond Show. Today I have the pleasure of finally interviewing Dan Zitofsky. Dan and I met at the IMN Single Family Rental Conference held in Miami earlier this year, where we were both speaking, and we have been trying to get this episode on a schedule ever since, but both of us have just kept missing paths. So we're finally here. For those of you that don't know, Dan is a high-volume investor, mostly landlord and passive investor whose goal is to become the bank. And he has selected a few that he considers around the nation, emerging markets where he first invests his own money before bringing in JV partners to share in the opportunities that he finds. You'll definitely want to grab a pen and pad for this episode because Dan drops a few jewels of wisdom you definitely won't want to miss, including his favorite 3 emerging markets in the United States, his top 4 deal sources, and, of course, a whole lot more. So let's jump right into it, shall we? Welcome to the show, Dan.
Thank you. Thanks for having me, Dan.
So, I know a lot of people know who you are in a lot of the same circles that we roll in the Philadelphia and other markets. But for those listeners that don't know who Dan Zitofsky is, can you give a brief Reader's Digest version about how you kind of started in the business and maybe a little bit of what your business looks like today?
Sure, I'd love to. Thanks again. Basically, I started in the business about 26 years ago as somebody just coming out of the teenage years, wanting to follow his grandfather's footsteps, but real tough trying to raise my own money. I was able to start off with a rental property, and from there, I grew that portfolio from rentals to I started wholesaling at one point. I started doing, like everyone else, the fix and flips, and then started building up a pretty nice extensive rental portfolio in different parts of different emerging markets in the United States. And what that did for me, it made me realize a lot of things. Passive income, it made me realize what I do and I don't like doing as far as property management or managing property managers, dealing with contractors or realtors or whatever it might be, down to the point of, legal and taxes and everything like that. Probably about 15, 16 years ago, I realized at the time I had a little over 60 properties. I was self-managing in the Trenton, Philadelphia, New York, New Jersey area. And I realized at that point it was becoming a full-time job for me, and it was something I didn't really enjoy doing as much. And it just stuck to me that at that point, I said, you know what, every time I have a problem, every time a tenant doesn't pay, every time a toilet bowl breaks, every time there's a roof issue, and this is happening multiple times per day. I'm getting 3 or 4 calls every day at minimum from tenants or rent's not being paid. I said, these banks, they keep getting paid. And I decided at that point, I said, there's got to be something better to this. And my goal, at least 15 years ago, was to become the bank. From there, I found many ways to do that, from private lending to buying notes or non-performing assets. And what I really specialize in now is, I do a lot of different things in the business, but I really specialize in taking a non-performing asset and turning it into a performing asset and hoping to become the bank for long-term passive wealth. And when I say that, I do everything from buy non-performing notes. I'm a first guy. I don't do too much in the seconds business. So I buy non-performing notes. I buy tax liens. I buy distressed assets from sellers, from property managers, direct like everybody else does. But my exit strategies are so much different than everyone else, whereas everyone's looking to either fix and flip, or they're looking to buy a property to rent it, or they're looking to just wholesale a note. My exit strategy is always, firstly, is based on get that note performing and try to retain some passive income. To the end is where most people don't want to go. I'm only willing to buy a note that I'm willing to foreclose on. And it sounds a little crazy. And when I speak at these events, a lot of big gurus out there tell me I'm nuts. But when I show my numbers and how I'm made whole in 12 to 18 months and my returns become infinite at that point, people's heads shake. And I always tell people, it's funny because I said, if I tell you my returns, you probably wouldn't believe me. I think we need to get on a whiteboard. But this year has been a great year. Like I said, I've done well over, I think at this point, we've done well over 1,000 private money transactions. We've over 650 rentals, 400 fix and flips. I bought and sold 2 hotels. I own 3 multifamily units that I did this year alone. So I do still pick those up. But my ultimate goal at this point is I'll fix and flip to now take that money and turn it into either private money for somebody, to take down a note portfolio, to buy some tax liens, because it's always geared at passive income. And it comes down to my quality of life and what I love to do. And if anyone's heard me speak, I'm not a hypocrite. I'm out there. I'm not working my butt off. I mean, I'm sitting there and on vacation all summer and I'm getting things done. And what I do is basically I want to have enough time. I want to have the time and money to spend with my family and friends as I choose to do, when I choose to do it, and how I want to do it. So rather than making $50,000 on a flip, I might take that property and rent it out. And then for my rental, I'll hold a note. I'll sell it to an investor. I'll hold a note for them. So now I help investors get into the business as well. And there's certain ways I do that as well that we can really dig down if you want to later on. And then from there, I could sell off that note. I can keep that note, have it serviced where I don't even touch a check, or I could sell off partials on that note. And I'm really hands off. And I always tell people I can never guarantee anything. And if anyone does guarantee you something, I would say run as fast as you could, don't walk. But what I do guarantee is I mitigate the risk as best I possibly can. And when I do my numbers, we're lending out way under what market value is on those properties. So we're holding a note way under market value on those properties. And our ultimate goal is to hold notes for non-owner occupied investors for multiple reasons. So I hope that kind of sums it up in what we've been doing and where we're heading.
So I want to point something out. You talked about something, and I know that, so I'm trying to listen from the listener's perspective. And I know a lot of people who are maybe early in the game or just getting into the business, and you see a lot of the gurus kind of selling the real estate dream. And, you know, the guy's got the coconut bowl with the umbrella sticking out and the straw, and he's got the, you know, he's sitting on the beach, right? And, oh, you could do this from the beach. And I think, like, I've had a challenge with, like, some newer people in their barrier to success being that they, like, believe that picture and that image of that vacation, you know, lifestyle. But I don't think they realize always the work that goes behind it. And I just want to point out, Dan, that, like, that's not the case for you. Like, I see you on Facebook, you're, you know, always in these nice, beautiful, tropical kind of locations and things like that. But you're always grinding. I mean, you're talking about it and putting the social proof out there on Facebook. So, like, for the people who are listening who don't know who you are, it's like, you know, you're grinding. You're out there hustling. I mean, it really takes a level of hustle to get to that point. And like myself, when I'm on vacation or I'm sitting on the beach, you know, putting deals together, I'm making decisions. I'm on the laptop. I mean, I'm certainly working as hard as I am, oftentimes at my regular schedule and regular locations. So I just wanted to point that out as an example there. And one thing you talked about is emerging markets. And if anyone's listening, can you describe what is an emerging market? And can you give us an example of maybe 3 markets that you feel are quality, high opportunity still, even though we've kind of seen rising real estate values around us, where we still might find opportunities to buy and still have some upside?
Sure, I'd love to. Great question, and I appreciate that. And I guess from what you said, your wife must be as happy with you on vacation as my wife is with me, right? But, you know, she had told me one point.
Still single.
See, you're in a situation, but you know what? I'm blessed to have a great wife, great kids, and they understand what I do and they're involved. But just off the side note here, my wife one time, she says, "Can we ever just go on vacation without you getting a tax write-off? Do you make this thing not business?" So
not a chance.
You're right. I try to make the best out of every situation I'm in. But sure, I love the emerging market. That's a really hot topic and a really good topic, and it's a little different for everybody. It all depends on your goals. My goal in emerging market is and not to get too detailed on it, there's class buildings, A, B, C, D. A being your best, B being your worst, you know, crime-ridden, drug-ridden neighborhood. I'm more of a class B to C type buyer, which means I like the blue-collar, working-class neighborhoods, pride of ownership. I don't even mind Section 8 as much, but I like the pride of ownership. I like the neighborhood gentrification happening. Emerging markets to me means companies coming into the market, growth happening, schools getting better, infrastructure being put in, grants for companies to, you know, tax advantages for companies to come in. I do a lot of research. I'm very, very big into the emerging market research. I don't just take what's going on out there because every guru out there that lives in the neighborhood is telling you to buy in their neighborhood. I go as far as, you know, checking out the Economic Development Corp. I check out the school systems. I actually, believe it or not, I talk to people in the Chamber of Commerce in that market. I want to know they know what's happening first. They know what companies are coming in, what permits are being filed. You want to see how salaries are going, how unemployment is going. So that's some of the things. In my business, I also look at when I take down a non-performing note, because I'm very big in the non-performing note space, the paper space. Rather than buying the property, I like to buy the paper and then have an exit strategy. When I do that, I look at other aspects as well. Besides it being an emerging market, I also want to look at length of time to foreclose in that market. What's the eviction process? Is it a judicial or a non-judicial state? These are things because, when you buy an asset, whether it's a tax lien or a non-performing note, you could sit in that, if you buy something in New York, New Jersey, Florida, you could sit in that asset for 3-4 years not getting paid back. So you want to look at that type of stuff, and it's very easy to research it. It's online, not hard. You can pick up a phone and speak to an attorney, speak to a title company. And that's the due diligence I do. And that's why my investors love working with us. They love joint venturing on deals with us. They love investing their money with us because they know we're not out there. And I say this because it's so important because some of the same groups I speak with, it's funny because I come out of an event that I speak at, and the people in the event are actually hitting me up, asking me for money to joint venture with them, but they don't know the first thing about the market they're in. Or they're in 10, 15 different markets without having an idea what they're doing. So when I ask them questions about, who's on your team, that's the other thing in an emerging market. You need a team. Dan, I'm sure you have it. You're all over the place, and you're killing it as well. I mean, you're in Chicago, you're in Pennsylvania, you're in Atlanta, I think, in Florida. You're all over the place, and you're not doing that without a team in place. So it's all about your people, processes, and systems, right? So that's part of my emerging market when I look at it. And some of my favorite markets, obviously, I actually located in Delaware now. I did a lot in Delaware and Philadelphia. I've been all over the United States, did a lot in Arizona and Vegas. But right now, my favorite markets, I'll give you today, is Cleveland. I love certain parts of Cleveland. And it's funny because when I tell people Cleveland, it melts drop. But if you haven't been to Cleveland, that's why I mean, it is. I mean, if you tell people Cleveland, they think I'm nuts. But if you haven't been to Cleveland in the last 5 years, you don't know what you're missing. And right now, I have probably about another year and a half left there before it outprices us.
How about that?
So that's why we do. Yeah, that's why we do. What we're big on is I offer. We're real busy, but we offer usually 2 to 3 buyers tours a year, where we have anywhere from 5 to 10 people show up. And it's not a money-making thing for us, but what we want to do is we want anyone that wants to invest in those areas, because a lot of our investors want to own their own portfolio of rental properties for the future. And it's a true turnkey investment property, true turnkey business, but we want them to see the market, because once they see the market, they truly understand what's going on in that market. And I can go through, and they probably spend 3 hours right now talking about why I love each market. But that's one in Cleveland I really love. I mean, I love what's going on with Cleveland Clinic. I love what's going on with downtown. I love how the city is just regentrifying these properties. You'll see a mansion right next to a tenement, and the tenements are coming down within 6 months. I mean, they're really putting a lot of money into this market. So if you ever get down to downtown Cleveland where the sports complex is, you would see a whole different market. I love the Memphis, Tennessee market as well right now for what I do. I'm not looking at it as fix and flip. I'm looking at it as a great emerging market for rental properties. And there are rental properties there for $10,000. Those aren't the rental properties I work in. You could, if you're a cash flow, just a pure cash flow buyer, and you don't mind stolen copper, stolen HVAC systems, rent not being paid, crime in your area, you could buy those properties. What I like is, like I said, the emerging part of Memphis, the Class B to C type neighborhoods, a little bit higher end, better school systems, less crime, less problems. I'll put some more money in those properties. But I like that area. There's a ton going on in Memphis, Tennessee, which I could spend a couple hours talking about all the companies coming in and businesses coming in there as well. Now, one of the newest markets I really love right now, and I'm not there right now. Just time-wise, I haven't been able to get there and make it happen. But I am going to start moving into the Huntsville, Montgomery, Alabama market. The Madison area it's hitting all my numbers, right? A-rated schools. It's an A to B type area. Crime is lower than a third of the national average right now for city this size. USA Today ranked them as one of the top 10 communities. There's more cash flow and blue collar in certain parts of Huntsville than it is in Montgomery. So, I mean, like I said, I can go on and on for each area and the amount of research I do. And I don't take any investor money. But one thing with me, too, is I put my money up first before I ever touch investor money. So when I get into that Alabama market, the Montgomery, the Huntsville market in Alabama, I'll put my money up first. And what I do is I actually put teams together. So I'll go down there and I'll buy 5 to 10 properties, and I'll screw things up, and I'll find the right contractors, I'll work with 3 different property managers till I find one I like. I'll work with realtors, I'll work with title companies, attorneys, and I'll get to know everybody in the town. And usually once I do that, 6 months to a year down the road, I'll have a portfolio now that I could show people, and at that point we could help them out. But I mean, there's a ton of emerging markets. There's probably a good 17 right now on my list that I like. But my top 2 right now are obviously Cleveland and Memphis and Delaware, and it's going to be followed by Alabama.
So what are your primary sources of deals? Because one of the things you mentioned was the length of time to foreclose. Like, I wouldn't care about that much because I'm usually dealing directly with sellers and we get title insurance, so I'm getting the title there. But can you describe, your primary deal source, and if it's not necessarily one, maybe where all the deals are coming from, just kind of give people an example?
Sure. I'll give you my top 4 deal sources. One is special asset managers direct from the bank. We deal with the special asset managers and we deal with hedge funds, both. And that's where we get our non-performing notes from. Okay, so we're just buying the paper. We don't own the property. The difference between what you do and we do at that point, Dan, is you're buying the property. You go to a title company. They switch title into your name. Everything's done. You own the property. Okay, we don't own the property. We're the bank. We're Chase Bank, Wells Fargo Bank, Bank of America. We actually have to go through and foreclose on this property to take ownership. Okay, so that's one way we actually get properties. And that could take, we're going to court and we're foreclosing. Now, there are times there's 9 different exit strategies I have. We don't have to foreclose. We can call the owner up, and we have the opportunity that bank doesn't have. So I make it sound gloom, but it's a lot better. Buying the note is a lot better than buying the property because we can call the owner up and we could do a lot. We're very flexible. We can waive some back fees. We can lower the interest rate. We could do a lot to get the owner of the property performing again. So if we get that owner performing again, we don't ever have to take the property and do any rehab. We just collect payments. We collect the mortgage from the owner. So when we're buying that property, sometimes as low as 20 cents on the dollar to 60, 70 cents on the dollar, we're actually, you know how hard it is to find properties these days. There are people now, all these new HDTV buyers are out there bidding 80, 85 cents on the AR. I know you see it because so it's not as easy to get properties as it used to be years ago. And we'll see a market correction and it'll get easier again. But so we're getting those properties right from the asset managers. We're also dealing directly tax liens. Tax liens, there's about 3,200 counties in the United States. So depending on the county you want to be in, you would either buy a tax lien or a tax deed. And not to get into tax lien or tax deed classes, and I'm nowhere near an expert on teaching people about all the counties. I just know my counties that I buy in. But there's ways to buy those liens where you actually take ownership of the property. I'm sorry, the deed. So you take ownership of the property once you buy the deed, as long as the owner doesn't redeem it in their redemption period. And every county has different redemption periods. So I hope that makes sense. So for people to understand that you want to look at the county and see what it's a tax lien or a tax deed state, and what the redemption period is. And what the redemption period means is if you buy a lien or a deed and they don't redeem that, if they have, let's say, a year to redeem it and the owner does not pay those taxes up in that time, you now own the property. So it's very important to know what the redemption period is. The other couple places I do a lot of direct from sellers. I have a big name out there, especially where I live in Delaware. I get a lot of sellers come direct to me because we know the one thing you need to do is you need to be able to perform. And Dan, I'm sure you see this as well. If you don't perform, it's a small community and people will know you don't perform and you can't close a deal, and then I can come to you. The other thing is if you can't close, if you're going to go in and wholesale those deals, I think it's probably becoming harder and harder to wholesale deals when you have guys like us out there that are going in. And we always tell people it's not that we're out there to buy your property, but if for some reason we have too many or it's not something we want to buy, we might sell it off. But the bottom line is when we tell you we're going to pay you this amount of money for your property, we're going to close. So you have nothing to worry about. Now, a lot of wholesalers out there that are doing that, they can't close on the deal. So it's either they hurry up and they find a buyer or they don't close. So we get properties that way too. And believe it or not, I get a lot from property managers, being that I'm in these different markets, because a property manager does not want to lose that property in their portfolio. So they know that if an owner has 100, 200 properties in his portfolio and they want to sell it off, they'll call me because they know I'll keep it with that property manager, and they know I can close on that deal. So I don't waste anyone's time. If I'm going to close, I close all the time. I don't ever back out. I don't play games. As long as you're honest with me about, the condition and the title and the taxes and stuff like that, I don't usually retrade a deal unless there's something you didn't tell me. So those are really the four ways that I get my deals. But I would say for the most part, it's mostly asset managers, special asset managers, and tax liens.
Yeah, that's pretty cool, Dan, because my number one source is direct to sellers. We do, an outrageous amount of marketing. But then my second source is like referral deals. So I have, wholesalers in each market that are bringing deals. If it's something I can buy, we'll buy the property. If it's something that, I'm not interested maybe in buying, I have huge buyers lists to send them out. We also have in that same category referrals. We've been finding that real estate agents that happen to be, in my network, and they operate in neighborhoods that are, I don't know, for example, 200,000-300,000. They're used to selling houses at, 150,000, 200,000 or more. And then they get this lead in some neighborhood that's, 20, 30 grand. And it's like, they're not comfortable even going to that property. And normally these agents are just kind of blowing them off. And so we've been doing a significant number of deals just recently with real estate agents referring us properties in neighborhoods that they just don't want to go there and handle it. The squatters, the same things I'm sure you deal with any low price neighborhood, the squatters, changing the locks, the copper stolen, all that kind of stuff. So like a lot of agents, that's like real scary stuff,
Oh yeah. And what's great is you're just telling people here now that why you're so successful. And I admire what you're doing too, just the same as vice versa as you're doing with me, because you have the processes and you have the systems, processes, and people in place. I mean, you really have, by far, you have one of the best processes in place to do what you're doing. I've been watching what you're doing, and I'm impressed, and I love it. And your process is even much better than mine, But and that's why you're able to do what you have, and you set up the right teams. So it's phenomenal what you're doing.
Thanks, Dan. Yeah, and thank God for the right people. I mean, you probably know, like any successful person knows, finding the right people to play the positions on the team is critical. And without, some would say luck, I would say the hand of Providence, introducing me to the right people at just the right time in their career/life, at the same time in my career/life, where I had a great opportunity for these partners who showed up and the people on my team, and they happened to be at a place where they were looking at it. Because you know how hard it is. It'd be like me coming to you, Dan. So you're a highly successful individual, and I'm like, hey, Dan, you want to come out and do X, Y, Z on my team? And you're like, you already got a bigger opportunity going. So like a lot of times the highest quality people are already too busy to like join the team. And then if you have somebody that's like not of the caliber to perform the part trying to join the team, you kind of get jammed up. So you need just the right person who's like just on that upswing of quality, at least I've found, for us to succeed long term. And I really am blessed with a great team. So speaking of the team, do you have like a team around you? How have you been getting all these deals done so far, Dan?
That's great you say that. And I was laughing because I just literally got off the phone with my coach, because I use a coach as well. And I believe everyone should have a coach. But my coach is actually, that's what he's an expert in. And that's what I've actually switched over the last year. I've really taken my team on steroids. I do have teams in each market. And you're right. The problem with a team is, the problem in this industry is, I was telling him the same thing, and I'll tell you this is the toughest thing, and everyone's listening, just understand you're not going through this yourself. This is the toughest thing I've gone through in this industry, is getting the right people in place. Friends usually don't work out. Family doesn't work out. You want to help them so much, but I've always been big on building businesses. And when I coach other people, because we do coaching, we get sent out to organizations and we coach them, I always teach them the same thing. It says, take your time hiring, but fire very quick. But in this business with your team, you have to realize the problem that everyone has is they're looking for somebody to do too much or what they're not qualified in. And that's what my problem was. I had people coming in and I was trying to get them to do different things that they weren't qualified in. And what I learned is you have to get people on your team to do what they're good at. And that's it. And get them to focus on what they're good at, and that's it. If somebody's good on your acquisition manager, stop having them go and do construction. Stop having them handle contractors. Stop having them handle property management. Stop having them handle marketing. They are your acquisitions person. have a marketing person. So I do. I have a marketing person I brought in. She's phenomenal. Blessed to have her. She holds me to the fire because I'm horrible to marketing. That's not my strong point. I have acquisition managers in each area that I'm in. So in different markets I'm in, I have 2 to 3 acquisition managers in each market. Here in Delaware, I have 2 acquisition managers who brought on. Their job is to go out, look at the properties, assess the properties, and they both have contractor experience, which is huge for me. So, but their job is not to do anything else but acquisition manager. I have property managers, people that just handle my rental stuff. I have people that handle my legal now. So they just handle legal documents. So especially with me handling tax liens and non-performing notes, they're handling, allonges, assignments of mortgage, dealing with the attorneys, those type of things. So what I have is right now we have a team. Our team is probably, I don't even know exactly, I think about 26 or 28 people in the 3 markets we're in. But what I've done and what I've changed so greatly is I've focused in, and that's where my coach is an expert in. He's closing 100+ deals a month and doesn't even touch anything, see anything, do anything. That's really where I had to go with this market. So if that can help anybody out there, just understand, the problem in this industry with people on your team, and Dan said it too, is that the people you're looking for are people you want to have that entrepreneurial spirit. The problem is most people with entrepreneurial spirits are out there doing it themselves. And I always laugh about this. I said, in a market, if we ever got together and put a couple of us entrepreneurs together, we'd take down the world. But we're all out there doing it ourselves. And because we have an entrepreneurial spirit, we don't want to work for somebody else. But then on your other spectrum, you get the people that are just lazy and don't want to do anything. And that drives us nuts because we think they should be entrepreneurs. So we have to get out of our own way. The bottom line is get out of your own way. Figure out the hardest thing to do is self-reflect. Look in the mirror, see what you're good at and what you're bad at, and don't do what you're bad at this point. Okay, because that's the biggest problem. A lot of people are trying to do too much, or they realize, here's another big one. They say to themselves, I'm not going to hire somebody until I make enough money to hire them. You'll always be chasing. You'll always be behind the 8 ball. Unfortunately, the hardest thing to do is hire your first person. Once you do that, you ramp up so fast you don't even know what to do with yourself. Okay? My next person I want to hire is I want to hire like a human resources rep that they can handle all the people for me because I don't even want to hire them. It's just I don't like doing it. I don't want to do what I don't like doing. And ultimately, I'm the laziest investor. You tell people I'm grinding, but the reason I like my passive income is because I'm lazy. I want to sit in my coffee shops. I want to sit on the beach in the summer. I want to hang out with my wife and kids and coach softball and football, and that's what I want to do. And that's the lifestyle I've been able to give myself. And I'm not sitting there drinking out of coconut and telling people to buy a course from me. I don't sell a course. But I'm just a lazy investor. And, it's funny because I'll sidetrack a little story. Just recently, one of my properties here in Delaware that, my wife is actually handling my stuff in Delaware. She's a phenomenal property manager, yeah. But one of my properties, the washing machine broke, and we had a washing machine in another property. It was good. We just had a new one, so we had it in the garage. So it's like, we've got to go to the property and pick up that washing machine and bring it to the other property. I said, why would I do that? Get my son Johnny to do it. And she's like, well, why is we going to send him over there? And I said, pay him to do it. Pay him $50 to go do it. She goes, why would we pay anyone to do it? Because I'm not going to waste 3 hours of my time going and doing something. She goes, you don't want to do anything. I go, exactly. I don't want to do crap. So that's why I'm in this business. I've done it for 26 years. I'm in this business. I don't want to be a hypocrite. I hired a team to do the job. If I can't make more than $50 in 3 hours, well, then I better go get a job somewhere because I'm doing it wrong. You just have to, and it's real important. So not to get off that topic, but hiring a team, that's why it's so important. But you're right. The hardest part is finding that right person. And I don't know the answer to that. Just really dig down deep and look for that person and make sure. The other thing you do when you hire somebody, give them a job description. That was the other thing I used to do wrong. I didn't give them a job description. I didn't tell them what they had to do. I didn't hold them to a standard. And if you don't do that, people don't know what success and what not success is. Like when you have an investor, when you have an investor, you bring them in, you should always ask them, what kind of return are they looking for? Because if not, you have no idea if they're a qualified investor or not for you. Just getting out of your own way, it's probably because you're screwing things up if you don't have a good team. And it was me. I was humbled. My butt was kicked by my coach, and I was humbled.
I want to switch gears here a little bit. I do want to talk about some examples of, like, let's say I have some money, Dan, and I'm going to come to you and we're going to do a joint venture together. I want to make 25% on my money. You let me know if that's unrealistic or what would you offer. And I'm only saying 25% because I'm going with something outrageous. And honestly, I guess it just sounded outrageous. So I want to go with that example.
Yeah. Well, that would be a pretty quick call. You wouldn't be a qualified investor of mine. And I would ask you, I ask some more questions. I understand what your goals are, and I understand what your capacity is. If you need your payments monthly, if you're looking to stay in the deal a year, 2 years, if you're okay with the non-performing note space. The thing with the non-performing note space, there's no way to guarantee any investment. I would never guarantee any return to anybody. But in a non-performing note space, there's times I can make 12% for my investor, and there's times I can make 50% for my investor. The problem is when you make that 50%, 60% for your investor, they expect that every single time. I always under-promise and over-deliver. But I usually tell my investors, I said, listen, I cannot promise you anything about returns. What I can promise you is I'm going to do this, this, and this. And I lay out all my due diligence, the market I'm in, the team I have, why I'm in the market, and my experience. Secondly, what I do tell them is I said, here's some of my past investments. Here's what my goals are. Most of my investors are happy making 8 to 10%. At this point, I have investors telling me they're happy with 6% in a stable market because what's happening with the, stocks, mutual funds, banking, they put the money in the banks, their CDs are 0.25% for 5 years. They just want to be in it. They want to see their IRAs grow. But what we do is our joint venture deals, we work them so many different ways. But ultimately, the way we work is my joint venture partners, they will put up all the funds to acquire the property, or the asset, I should say, not a property paper, to do the due diligence, to do the workout, the rehab, get the property performing, and then we do either a 50-50 or 60-40 split, whatever it might be. For me, at this point, you'll see a lot of new investors out there going crazy to raise money. For me, I'm very particular who I raise money from for reasons I don't really need the money from most people. We have a lot of money behind us right now because we've been doing so long. We've done such good amount of deals with the returns. The hardest thing for us is getting the money on the street, not getting it. Once you return investors' money, they're actually upset. They want that money in play. So I look at it like this. If I can raise money at 6, 8, 10%, do I really want to work with you? If it's somebody I really like and they're not a pain in my butt, yeah, because maybe I could take down some more assets that way. We've done funds before. We're probably after the new year going to start a new fund, take down some more assets, and then at that point, maybe we'll take some more money. And we only work with qualified investors. We want to make sure we're not taking somebody's last $50,000 or $100,000 and they need that money to pay their bills, because we don't want to make rash decisions on our deals because somebody needs their money back right away. So we're not the right investor. We're not new. So we're not like these newbies out there running around. We'll take money from anybody. They don't know the industry, so they just need money to take down deals, and then they figure it out later. And I know because, unfortunately, I get stuck coaching some of those people. But that's kind of how it is. If you're telling me, listen, I want double-digit returns, it's more realistic, I'd be okay, discussing it further. If you came to me and you said, well, because what I would say is, what kind of returns you look for? You say 25%, there's no need for you to be in our deal.
That makes sense. I guess I chose an extreme example. I mean, 10, 12%, 8, 10, depending on the JV, 50-50. Sometimes you knock it out of the park, so I'm obviously out here doing the work and seeing returns like that in my business. So that's why, right, when I'm working myself. But then some of my returns are also eaten up because I'll pay my investors the same 8, 10, 12%, what have you. What capital amount, Dan, would you say somebody you would be qualified for? If someone comes to you with $25,000, you put in a deal, 50, 100, what are your minimum capital requirements?
Usually I don't take less than 100, but minimum I would do is 50. And the reason why is I don't want to you can get involved with notes or tax liens with, $15,000 to $20,000, but then you're buying those type of assets in markets I don't want to be in. So it's not the right fit for me. And if I want to be in markets where I do my due diligence and I have my teams in place and I'm pretty sure, without guaranteeing anyone a return, I'm pretty sure we're going to get nice returns and we have a great exit strategy, then anything under $50,000 just is not a right fit. And if you're under that price, you're probably not a qualified investor, so it might not work anyway. Because I'll tell you this, once somebody hands us $50,000, we do a great job. The next time they're like, we got about $500,000 to work with you.
And as an aside, not part of our interview here, but I just want to mention it because it's pertinent for anybody listening. We talked quickly here about the IRA, self-directed IRA. And if anybody is interested in finding out more about that, I will link in the show notes of this episode to a previous episode we did with Carl Fisher, and we dive into that at a little bit of an intro level. So I'll make sure I link that for the listeners, and you can get some more information about setting up, moving your IRA to self-directed, and really getting some clarification on like kind of how to be a private lender to invest in deals like Dan is describing here. So Dan, I am going to switch to our questions, which we ask every guest who comes on the show. And the first of which is, who would be the most successful real estate investor or developer that you know, and why do you believe they're successful?
Some of the most successful people I know right now are Grant Cardone, which I'm sure a lot of people have. And he's on a level that has a mindset that most will never attain. I love his mindset, the 10X rule, and everything he works on every deal. I love the way, what I love about Grant is the way he thinks outside the box. And I'm very similar to Grant like that. We both think very much outside the box, and that's what sets us apart in this industry. In fact, just side note, before this, I got a coaching call this morning with one of my students who does non-performing notes like myself. He just went into a deal with tunnel vision and almost lost the property to get out of it, rather than actually think outside the box, take the deal, find multiple ways to, make money on that deal. Because his goal in his life, his goal was to have the lifestyle that I'm living now, or that I'm aspiring to get to. I'm still not exactly where I'm at yet, because I have some pretty big goals. But his goal, and he didn't think outside the box. He had the tunnel vision. So what I love about Grant is Grant will take a deal that nobody else could take, and he'll find a way to make it happen. And he's always stepping up his game. He's always challenging himself. And the guy is worth a ton of money. He can retire now and be the most successful multifamily investor out there I know out there, and I've had a chance to meet him, and he doesn't stop. So he's somebody right there. The other one I have to say is Mark Evans, who's my personal coach. I mean, Mark is he's a vision, man. That guy is awesome. I'm sure a lot of people here know him, but he set up a team virtually, and his team, his process, his systems are amazing. The guy's doing 100-plus deals a month in markets he doesn't even go to. He doesn't even look at the properties. He doesn't talk to anybody. He doesn't deal with contractors. He doesn't deal with tenants. He doesn't deal with property managers. All he did was set up that team. I shouldn't say all he did. He set up that team, processes, systems. So he's somebody living the life I want to aspire. And what he does great is he gets out of his own way to do what he loves. And once again, I think everybody out there should find a coach for everything in life, whether it be investing, your relationships, health, whatever it might be. And he's my personal coach and told me what I'm good at and not good at. And so I was able to handle real estate investing the right way, because he's handling like steroids right now. Those are the two people there's so many more I look up to. I mean, Les Brown. I mean, there's so many, I can keep going on and on about coaches and things like that and developers. But, your Donald Trumps and I can keep going. But those two come to mind when I saw this question. And so, those two are the ones I follow like immensely.
And I probably have a guess of a few of them, but do you have two or three you would consider life-changing books, maybe real estate, maybe business, or mindset and success related?
Yeah, definitely. That was actually a tough question, because I could rattle off probably 50, and it's hard to decipher which ones I like more or less. It all depends on what's going on. But on the real estate side, one of the biggest things for me was George Antone's Banker's Code, being that I'm a passive guy and I like being the bank. He laid it out really simple, and he's another person I was lucky enough and blessed enough to speak on stage with or speak in the same event with. And George is a great guy, has a great story. So I love that book by George Antone, The Banker's Code. Anyone that really likes that passive income to be in the bank, you really want to pick up that one of George's books or get a chance to hear him. I also love, like everyone else, I think, I have to say, I just started rereading it probably for the 10th time, is the 4-Hour Work Week by Tim Ferriss. That's probably, I got to say, that's my number one book. I mean, I have it. I think the pages are folded. They're written on. They're messed up. But, eventually I'll probably have to get a new one of these. But, a friend of mine shared it with me years ago. And this is my second version already. Someone already shared it with me. But that's probably one of the best books. I think that's my number one. And another real estate one is obviously going to be Everyone Should Read Rich Dad Poor Dad by Robert Kiyosaki. That should be a mandate in schools right now. That'll get your mindset changed, but obviously I don't think schools want you to read that. A mindset book I really love, which I don't even know if a lot of people read it or even know about it, but I got a chance to meet these guys too. There's a book, Life and Air, by Steve Cook and Sean McCloskey. It's just, and for me, there's, like I said, there's so many books, but this one really hit home because it's actually, people want to be millionaires, but they don't know how to be lifeonaires. And this really, for me, it embodies everything I work towards. That's a great book to pick up. These are great guys. They run their own little events too here and there, but the book is phenomenal. So that's one of the books I really like.
Yeah, Tim Ferriss was an eye-opening, changing experience for me to read that book. And I love when it comes up on the topic because I also, a few years later, read, and I got such great results from Tim Ferriss. He has a podcast. I've gotten a lot of great, cool ideas from his podcast as well. Maybe I should link to that in the show notes. But he had the 4-Hour Body, which I read about a year ago, and I lost 25 pounds in maybe a 50 to 60 day period as a result of, directly what was in that book. So, he just puts together some really powerful information. And so you wouldn't think weight loss and then business would go hand in hand. And I did it without, it was like, I went on the treadmill one time, Dan. It was like no, intense cardio. It wasn't like the typical things you would hear about weight loss. It was like a very comfortable and easy thing for me to do at the time. So, it was really cool. I like to mention that. Appreciate
What was the name of that book? What was the name of that book?
That's 4-Hour Body, and then that's 4-Hour Body by Tim Ferriss, and then the other one that he wrote recently, which I'm reading now, which is it's about the size of a Bible. It's called 4-Hour Chef, and that one actually dives deep into the process of learning new skills and things like that. And he's a Princeton grad, so he gets pretty deep and detailed and has a lot of great examples and a lot of great information to share. I haven't finished that book yet, so I don't know how good or bad that one is as far as recommendation. But 4-Hour Body, if weight loss or health overall, improvement in health is something that you want to do, even if it's not a weight loss issue, it's not a weight loss book, it's more of a, health and lifestyle redesign, which was kind of the same tone of the 4-Hour Workweek for anybody who didn't read it. So those are, they were two great books. I think they're both available on Audible. So if you want to just listen instead of reading, they're both great information there. Yeah, absolutely. Cool. Dan, if you could share the crown jewel of wisdom with your 18-year-old self, what would that be?
Definitely a couple of those. Find a mentor who you want to emulate and always challenge yourself. And when I say that, I wish I found a mentor and now there's so many mentors. I wish I found someone years ago that can actually challenge me. And the other thing is, really, when I say challenge yourself, I always tell people I love being the dumbest person in a room or a meeting. If you're the smartest person in that room, you're definitely in the wrong room. You always got to reach out further and always challenge yourself to get a little bit better. Because if you're stagnant, your business is stagnant, you're going to go nowhere. Okay? And then that's really, I always tell people that find a mentor and challenge yourself. That's ultimately what it comes down to.
Nice. And then if anybody's listening, wants to get some more information about you, do you have a website, phone numbers, emails, anything you'd like to share with listeners?
Sure. They could go to my website. It's Zitofsky, Zitofsky, capitalmanagement.com. That's our new site. Or they can get me at Dan at Zitofsky, capitalmanagement.com. Shoot me an email. I'm pretty good about getting back to you within 24 hours or less, unless I'm traveling. And I'd love to help out any way I could. And I think that's pretty much it.
Cool. And then for the listeners, I will add that website address URL in the show notes as well. So if you didn't catch that and write it down, you can always check out the show notes and get that information. Hey, Dan, I have a couple pages, 3-4 pages of notes here I took while we were on the call. A lot of great information. I'm intrigued to check out some of these other emerging markets myself. It's always great to hear, perspective of successful people like yourself. And I appreciate you taking the time out of your day to come on the show.
And I appreciate you having me, Dan. You got a great show, and I love your business as well. And I'm blessed that you actually thought enough of us to bring us on for your listeners. Thanks so much.
Absolutely. And thank you for listening to this episode of the REI Diamond Show. Are you interested in receiving an email notification when the future episodes are sent and ready? You can either sign up at www.reidiamonds.com or subscribe through one of the podcasting apps, including iTunes, Google Play, and Stitcher, which will automatically notify you of new episodes as they are updated. Are you also interested in either buying a deal from me or presenting one of your deals or listings for me to buy from you? Either way, you can submit the deals you'd like to sell or check out the deals I have for sale in Chicago, Atlanta, Florida, or Philadelphia by going to www.reidiamonds.com and clicking the link at the top of that page. And finally, if you have certain questions or topic suggestion for me that you'd like discussed on a future episode, or if you have a guest suggestion or would like to become a guest on the show, you can do that by checking it out. There's a link at the top of the page at www.reidiamonds.com. I get those notifications directly. So thanks again for being a loyal listener of the show. Dan Breslin here. I will catch you on the next episode.
Thank you for listening to this episode of the REI Diamonds Show with Dan Breslin. To receive email notifications of new weekly episodes, sign up at www.reidiamonds.com.